Hi, I'm Rudy Martin, editor of Emerging Market Winners for Uncommon Wisdom Daily. I'm seeing an interesting trend develop when I look at the flow of global capital. According to the report from the United Nations Conference on Trade and Development, the U.S. continued to be the single largest recipient of direct investments last year. But the report also showed that more than half of all global inflows were into developing countries and transition economies. For example, $159 billion flowed into Latin America in 2010. You see, two large Chinese oil and gas companies, CNOOC and China Petrochemical, made big acquisitions in Argentina and Brazil. Meanwhile, India also invested in the energy sector in Venezuela and the sugarcane industry in Brazil. In turn, those large Latin American multinationals such as Vale, Gerdau, and Petrobras further reinvested abroad to spur long-term economic growth. Now, if you want to profit from this trend, you can certainly invest in any of those companies. But if you're not comfortable picking stocks in this environment, you could step into broad-based exchange-traded funds that would allow you to participate in the winnings no matter which Latin American sectors lead the rally. For instance, the iShares S&P Latin America 40 Index ETF includes major companies from Mexico, Brazil, Argentina, and Chile. And the materials sector makes up nearly 24% of its holdings, followed by the financial services industry. Of the funds that focus on individual countries, I would favor the iShares MSCI Chile Investable Market Index Fund over similar ETFs for Brazil and Mexico. You see, Chile has a more mature economy than most Latin American nations, and its ETF invests more heavily in utilities. Industrial stocks, materials, consumer staples, and financials are also well represented in this fund. I also want to mention a couple of other smaller country funds. I like the iShares MSCI All Peru Capped Index Fund, but I think it's too weighted towards materials with 60% of its holdings in that sector. Instead, I would suggest the Global X FTSE Colombia 20 ETF. See, financials make up nearly 40% of its holdings, followed by energy stocks at about 23%. If you're looking for high growth, forget about the soap opera in Washington and look to Latin America. That's my take on it. Thanks for watching.